Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. We bring you the information. You do your own research. And today's guest is a renegade trader, technical analyst, and the founder of the Market Sniper. It's Francis Hunt, somebody I always love talking to. Great to have you back on the show.
Glad to be back with you, Jesse. Thanks for asking me back.
Of course. Now, I want to get started with a broad question. I'd just like to know where your head is at when it comes to your macro outlook. What are you currently paying attention to, the main themes and trends when it comes to the markets and the global economy, things that maybe you think more investors should be paying attention to as well?
So I always start with the statement we're in a debt-based collapse, which also therefore has an FX stroke fiat element to it because the two are related. We've just had a bit of a yen trade unwind, which is a risk off. So when you ask about what do we watch, we're known for referring to the USD JPY as the fear index for the last 2 decades. We talk about it. So whenever you get an unwind of the carry trade, people are becoming afraid for the outlook of risk assets. So as a result, you get a bit of a sell-off. So the USD JPY is one of those indicators. I started by saying a debt-based collapse. We watch the yield curves and the yield curve inversions, which are getting perilously close. The 30 and 2 has already reverted back positive, and the 10s minus the 2s had a spike through the 0, which means they came back from being inverted and reverted to a more normal yield curve. And this is the typical point when the crisis finally lands. So we got the yen curve trade unwind, but I think there's going to be a second spell to all the economic malaise that hasn't fully played out. I think this is potentially more of an initial tremor before the main earthquake, because the reversion of the yield curve, which is looking like it's inevitable on the 10s and 2s, and that's something we can check even for today, because I haven't looked at it today. If we have a look at US 10 years, minus 2s. This is quite a technical topic. It sometimes loses people, but it's a very important indicator. It's the yields between long-term debt and short-term debt. It's another thing we watch that we treat as a very big indicator. You can see for now, we are reverting back into the inverted state, but that was the tremor mini crisis, I'm going to call it. It may not have felt like a mini crisis to some, but you're reverting back. We were warning quite some time ago. We'd drawn the squeeze on here saying we're expecting an upside move on the yield curve inversion towards the 0 line, which is the reversion back positive, which is the point at which you find out what the crisis is. You literally touched it. We got a yen unwind, yen carry trade unwind, and now we're pulling back. I fear that gets a leg 2 or a leg 3, because we're going to revert positive still, in my view, during this September, October period. I think this is happening in and around the coming election. And I think in December, there may not be so much Christmas spirit. Let's just put it that way, if that occurs. And we're very, very close to that event happening. So what's the big deal about that? It sounds a very technocratic discussion, because most people don't understand debt markets. They only understand equities and other things which are more simple. And we are almost encouraged not to understand debt markets, because if we understood debt markets, we would ask awkward questions. It's along with FX, these are the biggest markets by far. All your money is borrowed into existence. When you buy a house, you aren't buying with somebody else's savings. They're actually creating new money and saying, there's credit for you to buy the house. We now own that asset until you've paid us off, and you pay us usury on that. And you sign a contract that agrees with that. That wasn't someone else's savings that repurposed money. It was new money that was created. So that is a borrowed instrument. Now, there's a lot of that borrowing going on, not just by people buying houses at the retail level, but by businesses and governments. So you get corporate debt, and then you get government debt. Government debt are called treasuries, and sometimes on different time durations, T-bills and various things. So they borrow short-term and long-term and all sorts of structures. So it's like a personal loan for 2 years. It can be a mortgage for 30 years. The government is borrowing in all forms, and they are creating products that somebody else has to keep as an asset. The problem with this is that Yellen's adding $1 trillion every 100 days. In a year, that's 3.65 trillion. And that is largely not productive expenditure. It's being given for, well, for some it is. It's not for you, because every trillion obviously is diluting the dollar power, and it's really strongly inflationary. But because of the recession that the one part of the economy, think of a twisted balloon, the retail and the consumer is experiencing, they're spending less, they've got less money, they're dropping down in this environment of high rates and inflation, which is a taxation from below. And then, of course, they're creeping into higher tax margins. So the big narrative is the middle, the working class, and the working poor are being crushed. The people that get to borrow at Japanese rates, that buy assets in America, then benefit from inflation. That's the shell game. The creation of money devalues the huge borrowing they've had. I mean, $1 million 30 years versus $1 million today. It's such a huge difference. If you'd borrowed a large sum many years ago as a billionaire to buy properties, casinos, farmland, you name it, productive assets, Miami fancy apartments or properties on the waterfront, those assets are now creeping up and actually holding in real terms some value due to the inflation. And the debt is just being compounded away into nothing. And you borrow cheap because you've got an institutional broker who can let you borrow in yen, or you're just getting cheap rates in dollars. So it's a billionaire class enrichment tool. And it's a middle to low class impoverishment tool. So this is the creation of a two-tier wealth system, and this has been a known, call it a conspiracy, if you will, of talking about a two-class human race almost. One that gets amazing lifespan and stem cells and all of these expensive life-extending therapies, and is smart, and their kids go to greater schools, etc., and these sort of things. So it's a bifurcation of the human population. At the same time, we're having a bifurcation of the planet by this sort of, and that's on a lower level. At the top, they're all friends, in my view, working against each other, pretending to fight. But actually, the attack vector is on you and I by government, statist, corporations, dark states, and nation state thinking, where we are made to go to war with another country, and they cancel out some population on both teams by mutual agreement. So that's kind of where I'm at as an opening statement. Debt, fiat, devaluation. And the cure for that was the chart I had up, which is another of the charts that I watch immensely. And everybody should be saving in gold ounces. Everybody should be saving in gold ounces. And just by the by, if we pivot to the monthly, everybody talks about how strong the dollar was and what a heroic performance it was in quarter one. Well, you're seeing now a bit of the carry trade unwind, how weak it's suddenly become because of that degree of borrowing, cheap borrowing. And we don't know how deep that goes. Are there any derivatives involved in that? That could really mean it goes a lot deeper than we think. Are there, what is engaged in all of that? But over here, you're in the 240s dollars, and today you're in the 2,400s dollars. So you're talking about a 10x consistently. And I gave an analogy with someone else on this. It's like I've got Usain Bolt out to come and run alongside my car. And literally, I'm in first gear going at 5Ks, and he's just loosening up and strolling next to me. And I'm going, okay, Usain, warm up, stretch those arms, and he's sort of, getting his knees going. We haven't even begun to canter let alone say, okay, big boy, give me that 9.69 pace. Let's really stretch those legs and kick those heels back and show me what you're all about. We are literally in the loping stage, and it's a 10x in 24 years. Not even, I think this is 2001, but getting towards a quarter of a century, done a 10x, and it's the slow part. So gold ounces, saving in gold ounces it's one of the most core things, and I like to get it out early, and then I'll let you unpack some of that.
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Could you bring up that 10 to 2 year treasury chart again and maybe just break that down a little bit more and how that relates to this debt crisis you're speaking of?
It moved towards reverting. So reverting is the phrase for once the inversion ends and it goes back positive. So I've done an annotated, this is such a commonly used chart by me that I've got, a whole bunch of annotations left on here. So I'll just take all the text off first. That's how it looks since 1989. So post 1987 crash. Every major crisis is in the red box, the red boxes. The inversion, the reason why this is such a powerful indicator is it's a leading indicator. It comes first before the event. Yes. So the orange boxes are showing you, hey, there's some stuff building up that's going to get worked out and it's going to be ugly. And the event comes on the reversion. So you had the 90s, early 90s wobble and recession. I think that did for George Bush Sr. In his election period. Then you had the Asian crisis reversions over here, long-term capital and the Asian crisis. You got very close, and then you did actually have a minor inversion with the long-term capital situation. Then over here you had in 97, you inverted. And everyone was saying, no, apologies, that's the Asian crisis, that was 97. This is 99 going into 00. You got a 2001 dot-com major recession in the red box. Here is subprime, where you inverted. And that was 1st of February 06. The last major meaningful one was that one for me. CV19 was quite quick in and out. And that was the repo liquidity of September and October in 19 that warned of a crisis yet to get its name. And you got the name. Subprime, I remember, and I knew, well, there's something big coming. And I was in the property game then. And then you got, bang, demons going bust. You see, this happened quite early. You had a first reversion 06. You came down again later in 06 and you reverted back a positive in June of 07. You had Lehman Brothers going bankrupt in 08. So it leads. It tells you something before it's going to happen. You look at the Fed and their labor stats, everything lags. It's the last thing that you see that turns bad once you're already in trouble, which is why they're known for being late with their interest rate policy adjustments, because they are lagging indicators. They have to be certain. They wait for confirmation. This is a leading indicator. So we have actually been in the longest inversion of the yield curve on the 10s and 2s. So that's probably the most popular monitored one, 10-year yield versus the 2-year yield. And we've been in an inverted state there since August of 22. And the inversion got more extreme than it's been for the modern era. So since the 80s, I'm talking the bull market of bonds literally began in 1982 with Volcker at the super high rates. And we've been in a non-stop financialization of everything, creation of money, dropping of rates, creation of money, liquidity surges. We've created so many pumps for the boomer generation to ensure that they pension out well. I can't tell you whether it started in 1987 stock market run. In fact, the stock market had even begun running in 82. You had the housing boom. You've had them all. You've had the tech boom. You've had the dot-com boom. You've had the AI chip boom. You know, they liquidity central and busts that are associated. But those have been just for that cycle busts. Now I feel we're getting the whole 40-year bust of the debt creation because there's too much debt. And something to look at, just if I just put the US 10-year on there, the long-term debt curve, and show you the same period. It's our opinion that the debt markets turned from this 80, 79, 80, and don't forget what happened there. Gold, super extreme high, $800 when a dollar still meant something. You know, you bought something with a single dollar in those days, in 1982. So 15.5, 6 was the yields. This has been an epic, and I must log scale this so that you can see it in percentage-based terms. This is a final spill. The CV19 event of shutting down most of the world, except the oligarchs that could continue to sell goods online like Amazon, shutting down most of the world. This was an absolute capitulation. This was peak bond valuations. They were only paying 0.33% on the asset as they were issuing it there. That was a fear into debt. No longer is fear running into the debt market to any like the same degree because we are creating so much of it, and because we've bifurcated the planet that China is no longer buying it, Russia is no longer buying it. We went and stole theirs and politicized the SWIFT system. So what's actually happening is they're buying gold instead, and we have pivoted here from the safety trade, in which was this entire 40-year bull market. In this, remember, the yields going down, the asset values are going up. This entire period was a definancialization, precious metals significance was said. You don't need a whole gold. It doesn't pay you any interest. It's not needed. You just own T-bills, and it was the substitution of T-bills for the precious metal. And they've abused that to the point that we now have an absolute plethora of T-bills. They're printing up $1 trillion, as I say, every 100 days. And that people just don't understand the scale of $1 trillion. Again, super quick. To count to 1 million, if I count every second, that's taking me 12 and a half days. To count to 1 billion is taking me 32 years, 1 billion with a B. To count to 1 trillion, it's actually taking me 32,000 years of life. How many generations of my lineage would have to stand there saying a number every second without ever stopping to get to 1 trillion, 32,000 years worth of my generations, if they were prepared to accept a deal like that. So that's what's happening every 100 days, being added to the pot that's already at 35 trillion, which is 33 times 35,000. So the scale of this is actually unbelievable. And it has to, mathematically by definition, fail. And you should be entirely focused on this, because this is the thing that's happening. The biggest thing that's going to happen in your life. And the distractions they're going to throw up at that point of failure to confuse you, kicking up the dust while they're fighting you, and throwing crackers and sideshows and, oh, look over there, look over there. You don't even begin to know, to understand. Your goal is to stay focused on that capstone that those Illuminati's conspirators show you, the key event. That top of the pyramid is the collapse of that top, that capstone into the ground as all the layers crumble because of an excessive debt and fiat creation system. Everything else is secondary, and they will throw up wars to create demand, and it is all an asset strip. The military-industrial complex is the ancient mannerisms right from the mercantilist era along the paths of Marco Polo on the Chinese Belt and Road, where you extracted from people who are walking through the desert, essentially like burglary and banditry. And that was war or warning of other people might fight you so that you could sell arms, then going to the other party and telling them they're arming up, and eventually making people fight because you got to pick up the pieces and the possessions of two people clashing. So who is that third party? Well, you could spend time trying to find that out, but you may as well prepare because it's almost impossible to stop it. You and I were talking off screen about, Serbia, nobody wants war. Nobody really in the UK wants war. Nobody really in the US wants war. But guess what? There's Americans fighting in that incursion into Russia from Ukraine as an offensive. There's British involved with support and equipment in both Ukraine and arming Israel with special missiles that's bombing Lebanon. We are always at war because the people at the top, the coerced owners of the system, are always finding reasons, and even when they're not admitting it, are always making war because it is enrichment for them. They own the military-industrial complex. It's a very efficient way for adding vast amounts of debt. Ammunitions and munitions for planes and missiles are unbelievably expensive. It's just a great extraction mechanism for adding debt, which is huge and devalues you. And that's why we're getting the inflation, our bread and everything. It's the silent tax. It's the most snide, sneaky tax. And it's military industrial complex is the best way for doing it, because you put it on the debt, you proliferate, you overspend, you dilute the currency, you're effectively taxing everybody in your nation state, and every of the nation states, particularly the Western ones, are doing it, which is why I say consider leaving. So that's back to you.
Let's talk about gold for a moment, because you mentioned you must save in gold ounces. I completely agree with you that holding physical gold is a very important strategy to protect your wealth against this event that you're seeing coming, this kind of collapse of the debt. And you're so right about all the distractions, which I want to get to in a little while later. But first, talk to us about what you're seeing for gold at this point. It officially closed recently at another all-time high. It continues to hover around the $2,500 level. It's one of the few assets, aside from treasuries, that held up quite well when the market was correcting and the Nikkei crashed. What are you seeing for gold up ahead?
It's as I mentioned in the earlier part, literally you've got one of the fastest sprinters in the world warming up before giving you a gold medal Olympic rate sprint. And at the moment he's loping. This is not even the beginning of the race. He's just loosening up. That is, I can't give a clearer analogy than that as to where we are at. And that's still a 10x in 23 years. I see the acceleration of this trade gaining pace. We've said many times before on record that 2.9, there will be a bit of a pullback at 2.9 and a rest. And just before the 3K, we might technically run the 3K on a day or two and then pull back for it. And then we've said 6.5, 7,800. These things are going to come fast and then furious. So if we were to meet again in time X, let's say it's 3 years from now, 5 years from now, and I had this exact same chart, this laptop was left right here and it just updated. The gradient between 2000 and today versus the gradient I'm expecting, I think this will have steepened immensely for this chart, and it's a log scale chart as it is. So I think it's probably the safest protection that most people can simply and easily still do. And you shouldn't assume that you can always be able to do it as well. It may become possible that it becomes classified as a strategic asset for governments, for establishing as, balance sheet, a core asset. I'm not saying that this will happen, but don't assume that you'll always be able to buy exact gold, or that you'll always be able to buy gold that doesn't have chips, tracking, and a registration docket that goes with it in some form of digital ID for the bar and digital ID of you as well. You can buy black gold now. By black, I mean like black market gold. Essentially, they're the same. But my expectation is purchases of gold in the future at far higher prices will probably find that they'll need to be registered and biometrically registering both the owner and the item, almost certainly. That's an expectation I have. So you can either buy cheaper now and it'll become underground, undeclared gold for you, providing you can produce an invoice of selling it to Ahmed Al Mohammed in Qatar for them to go find. Good luck. But providing you can do that, you'll be able to have some dark gold on you all the time. And that is real balance sheet. And, you know, they will try undermine the purchasing of gold, probably by even at a corporate and a status level, selling fake gold to try proliferate it. So here's two key trend predictions I'll give you, because I'm not only a technical analyst, I'm not only fundamentally alert to what is going on, I like to spend forward-looking, futurist thinking time as to how they kill certain things they want to kill. Or reduce or make look unattractive. If a lot of people start buying gold, it will be within their interests that they contaminate often even central aspects of supply. And they'll let it be known to the insiders which ones they are, so they don't buy from them. But you could need to have all your gold X-rayed, and you'll see a proliferation of fraudulence. Also, if they want to kill cash, for example, and I'm also a fan of holding cash even though it devalues, just for the grid down moments, when the ATMs go dark, when a lot of things stop working and you need to spend. Gold is not as easy an expenditure put, even though I suggest having coins, bars and everything, and also silver and smaller denominations. It's still not the easiest exchange for small everyday items. So maintaining cash, which will need to be still relevant, is also valuable even though it's devaluing, but having a reasonable amount of it. How will they eventually kill cash? There's already a known fact, and I've watched documentaries on this in South America, in Peru, in I think it was even Costa Rica or Ecuador, that there's incredibly good printers that actually print fraudulent money. And they're often running around trying to catch these guys, and they're printing dollars. So eventually, if they go industrial, the statists, in other words, the people that don't want you in cash anymore, they can also unofficially go industrial on counterfeiting themselves on non-official dollars that have a very small item flex that is slightly different that those that know will know. They will create such fraud that eventually cash can no longer be trusted. So if you eventually flood the market with fraudulent cash, that's 50% of it or even more is 60%, then nobody takes cash anymore. And it's very good quality fraud. And we already have a far higher percentage, I'm afraid to say, of money that's being released in USD from just local criminals that is fraudulent. When the real criminals arrive, they will get a final hooray for their party bag. Don't forget, they're making out like bandits in the crash. So they'll get a whole bunch of wealth in. People will give them goods, give them services and items or physical assets with cash, I'm sure, and they will get fraudulent cash out. So they will poison the well of cash, and they will also attempt to make it very difficult for people to buy confidently gold. So you should be exploiting the time now to get registered gold that can be X-rayed, well certified, and getting it in your hands. And you should already have your sale invoice prepared for someone who's going to be recently deceased in 5 years' time that lives in a country far away. Because you may even have legalese brought to bear on you to force everybody to register their assets on the blockchain with an NFT. So later someone like BlackRock can proliferate the new UBI currency of choice and purchase all the NFTs and become via derivative proxies, owners of your assets. So these are the attack vectors I'm seeing. that are coming your way. And you need to prepare for that now. This is the great game. This is game theory. That's where I'm at. And gold is the solution because it's physical. All digital assets should be treated like a trading stock that you never get given the trading certificates for. By the way, I've tried a couple times through Schwab to get my certificates on a gold company. I get very little cooperation. I've contacted the company's agents. You should see how obstructive they are. I don't own those shares. I have a proxy because it was so cheap, the trading, $30 to buy, $30 to sell. They aren't doing anything for me. They've said, we'll just give you a proxy token that goes up as much as your equity supposedly has gone up on the day. I don't hold those gold shares. And until I get a certificate in paper in my own name, that money will be lost with these brokers that are doing it. And it was quite common in Germany. There were about 130, or there were thousands of banks that went bankrupt, most of them run by the mercantilist classes, a bit like Schwab today. So watch out for the equivalent of that great taking as well. You don't own it. If you don't have a physical piece of paper, you don't own it. And even still, I prefer gold on that because holding it in your hand is the item. So we really, as they are pushing you digital, that is part of the strategy for stripping you. You will own nothing and be happy. And that is not just an essay by a 30-year-old Danish teacher. That is intent. They use demure females to float some of their most draconian schemes. I just watched an IMF video with a DEI female explaining how inflation is a supply and demand thing. Coffee went up because there was droughts in XYZ country. And also, cars and things went up because there was COVID and no one was making anything and there was too much demand. I go, oh, that's kind of handy. No mention of the debt, all the stuff you and I have been talking about. And again, so they use females, particularly with this, to tell some of their worst and dastardly lies. And it's not what they're saying is entirely wrong. It's what they're leaving out, which is the great big lie. There can be localized inflations in individual items because of supply and demand. What you don't get is both coffee beans that are grown at different altitudes and in different nations, from Vietnam to Brazil, all having droughts and floods at the same time, that the Robusta bean goes up, that the Arabica bean goes up, that cocoa, which is also grown again in different countries and different places, also didn't all have simultaneous floods or droughts, also gone up, and they've all gone up 4x. No, that is devaluation of money. They avoid the biggest narrative by talking around the side of the issue. That's how they lie. It's the cunning lie. The lie is what they don't say. And the misdirection. It's always the misdirection to what isn't the real driver. That could be in a unique circumstance, but right now is not the narrative. That IMF video, it's just such a puff piece. So we spend our time debunking lies that are misrepresenting the true situation to people so that people can best understand the truth. I want to live a life. I've determined certain principles I intend to live by. And that is, no matter how uncomfortable, search out for what is the exact truth of the situation and the story. Because it's only through understanding fully and deeply the immensity of a situation that you can understand the immensity of your needed reaction and solution. If you think it's just a nick, you bring a Band-Aid. If you arrive and the machete has chopped a chunk out of somebody's chest, you're sitting there with a Band-Aid and you actually need 10 rolls of gauze, stitching, surgery, and a whole bunch of different things. You're underprepared. So tell me the full immensity of the situation so that I can make a proportionate, logical, and rational cure for those that I'm attempting to protect. And I am attempting to protect my community, myself, my family, but even help with quite a bit on a free level through my YouTube channel, people that just take the time to look for truth and are sick and tired of BS.
Very well said. I want to unpack a couple things you said there. One was that if you don't hold an actual stock certificate, then you don't actually own that share. It's being held for you. I mean, we've both read David Rogers' Web, The Great Taking. I think a lot of people watching have as well. If not, I recommend you do. It's a free PDF. You can find it online. Pretty terrifying scenario in there. Will it come to pass? I'm personally not sure. However, should people proceed with caution when it comes to the equity market? Do you think at this point in time it's not smart to have the majority of your net worth in equities? And as a follow-up question, what's the alternative in terms of if you're looking to make alpha? Obviously holding gold and silver is great to protect your wealth and to have an asset that's removed from counterparty risk and to store your wealth. But if people should be cautious about entering the stock market, how can they then seek to increase their wealth in the way that an equity market allows people to?
What I just said about debt doesn't hold for equities in the same way at all. So debt is something I absolutely won't own. You'll hear George Gammon, I've taken calls on TLT and all of this. I won't even take a short-term option on it, even if I think it's going to go up, like it on a bit of cuts news that it will. Because it could suddenly turn and fall, and it's in such a capitulation. So I'll just show you the TLT. It's essentially a fund of long-term 20-year plus related debt. That's the elevator. It's been falling down. That's the top call in the bond market that we made a few months around August, September over here. We then got the head and shoulder that we've drawn many times. We made that head and shoulder target. We've collapsed. Now, you did get more recently a little bit of rallies. You can see some green candle action. I'm not interested in ever catching any of that. For me, this asset category largely effectively goes to some value very close to zero, if not zero at some point, and may at any point violently begin to undertake its journey down there. So it's really like trying to catch a bar of soap that's slipping down a pipe down the road to the gutter. I'm not interested in it. It's just of no value long term, and the flow that is going to need to come out of ever greater crises. All the risks are to the downside. All the solutions are more money creation. And the efficiency is reducing. The return on it, the amount borrowed, and the effect on GDP is greatly reducing. It's well below 1 to 1. So everything is just a parabola against you. So I'm not interested in it. Equities is slightly different. That's not to say overall on valuations, the US equity market, because we'll talk about the US market now, is good value. I don't see generally it's being good value, but you have a lot of substrates in this. Equities, you can talk about gold miners, you can talk about Mag 7, you can talk about the equities that have been left out of this larger equity bull market. Remember, it's been driven by largely statist, oligarchical, technocratic surveillance finance system companies. Chip companies, Microsoft, Amazon, Netflix, Tesla, Meta, social media, which largely always ends up in the Israeli data hands. They have all of this, including WhatsApp, which is why they know exactly how to bomb, on-point bombing certain people with phones and devices. I mean, those guys, government is creating new money and handing it to them, and they're making out like bandits, and you're getting the inflation because they're doing this. There should have been antitrust on the likes of Google absolutely ages ago. They ran YouTube. They have Android, which has vastly proliferated more than even iOS is for Apple, although they should be antitrusted as well. They've got too dominant a position in far too many things. But it serves the statists to have one corporation and one CEO to go to get all the data collection, all the YouTube algorithm adjustments, all these various things. Instead of it being broken up in lots of medium-sized, fairly strong companies, it's all pulled together like a monster. And so we have this oligarchy. And as long as we are in this environment, the government's going to continue to destroy your currency, tax you from under up, and these people will be getting the bulk of those profits. If you have a look technically at the chart on the SPY, This is a hammer that's reversed. You had a little bit of a shooting star. I'll go back to there it is. This is a very positive technical. So right now, I wouldn't be telling anyone sell all your stocks. You had a bit of a shooting star that was a warning something was coming. And then the next candle, you've had your dip. This is, of course, on a monthly time frame. I always suggest looking at candlesticks on a monthly time frame, and you have reverted all the way through this yen trade unwind narrative and this dip that we've had. You will make new highs. So, but hold on, that's totally different to the debt market. Well, the US equity market is the chosen destination for the carry trade capital. Even if you're a Swiss bank and you're borrowing yen, you're not buying the Swiss stock market. You're buying the status corporations that are running the surveillance finance system currently housed in America. Or you're buying US treasuries because they raised rates fastest for longer to a highest point. And the US needs people to be buying treasuries because otherwise no one else will get them. So that's why there's still a bid under treasuries to any level, because they're getting to borrow at much lower rates, and then they get a fixed rate of return. You can calculate how much you're going to make a month. It's a cash generator. Imagine you could borrow 500 billion. You and I, we could sign a contract for $500 billion worth of yen and just stick it in T-bills. It's a great trade if you can get it. And that's that billionaire class that gets access to that kind of funding. So this is this will go higher. This is a beautiful hammer. It's come all the way back up. We literally today talking, you and I, Jesse, today, and you have come right back to where the crisis started. That is a doji candle. The open and the current mark to market today on the SPY is the exact same place. You've had the whole bed wet and you reverted right the way back up. That is still a strong market. That's, yes, there was some fear and some debt, but that's not even like this sell-off. This is going to look like small beer. I remember when it was happening, I was saying, yeah, it's not even 1987. It's not a lot of crashes. Compare it to how we came off in 2022 for most of the year. That was when the 60-40 portfolios blew up because the bond market fell through the floor and the equity markets fell through the floor. That was like, wow, what's better? The bond market should have protected us for this equity pullback. No, you don't do 60-40 anymore. You can have the equities. So when you ask the question about equities, is it gold equities? Is it those have been, languishing. They owe a big run, but they're going to need the gold market to move more. They're going to need the silver market to start getting to new highs, and then only do they come online, because they need long-term proof of consistent high prices, and they've had the inflation costs on breaking holes in the ground. They've got all this ESG taxation and difficulty. They can't raise finance cheaply anymore. Unlike the carry trade for the bloody bankers and the cartelists, that mercantilists that can get facilitated cheap money, they don't. You can't. If you lend to, they have to go to hedge funds. There's people that were in the oil tanking business. You can't even get a bank to talk to you anymore. So by making finance for certain kinds of companies very difficult, you raise their cost of capital. They end up issuing more equity, and they are diluting gold in the ground per share. So their share value should reduce because they're proliferating themselves, but they're proliferating script. So there's not nearly as much gold assets per share as well. So they are diluting. So until we start getting consistently higher prices at a rate that's significantly, so until gold starts outperforming inflation, at the moment it's barely broadly held inflation. What's happened is it's going to start chronically outperforming inflation. That's when the gold miners will start to really, really get their running shoes on as well. But if you're talking tech stocks, as long as this is reverting back up and the good old proliferate is going, they're going to do just dandy. If we get the yield curve reversion, a sudden spike up, they'll have another sell-off, potentially. But people will get bored, and it will probably revert quite quickly if we get to a proliferation again. But we don't get to see rates go to zero again. In fact, the next major significant move, we're going to be controversial here, is rather than the cuts that Powell is probably going to do, people are penciling in 2 cuts and then followed by another 2 the following, at the end of the year or whenever, October, November, December. That's essentially 4 0.25s. We think you may not even get all of that. And in the next major move of multiple percents, we think is going to be a spike to the upside on a debt collapse. And that's how they will impoverish everybody who's on borrowed money. And the American nation is on borrowed money. They borrow for their cars, they borrow for every item they produce. They put it on monthlies. And that's a worry.
Well, let's talk about the distractions in a little bit more detail, which you alluded to earlier, because we're seeing a lot of madness unfolding around the world. Obviously, hot wars going on with Russia, Ukraine, as well as in the Middle East. That seems to be heating up. Putin recently declaring that there's no longer going to be any peace talks with Ukraine since their incursion into Russian territory. In the West, we've seen a U.S. presidential election where one candidate was nearly assassinated, the other drops out of the race. The UK police are now threatening not only their own citizens, but everyone around the world who dares to post on social media anything against the regime's narrative, which is Orwellian is perhaps too polite a term for that. We've got the EU Commissioner, Thierry Breton, sending Elon Musk a letter saying, you'd better censor your interview with Donald Trump or we're going to come after you. I mean, the list goes on. It's just getting completely insane. Are we witnessing the Western Empire in decline? Is this all part of the distraction you're speaking of to take people's eyes off the real issue? What are your thoughts?
Twitter and social media is actually an emotional outrage provoking algorithm designed to manipulate your mental state and your reactions. So you go out there and you hate on immigrants, Islamists, when actually most of them might be school-going, family-loving, pretty straight up, and don't run around with machetes. That's the jail squad that they emptied out of Libya that they just finished boating in just the other day, and you think it's, the guy's been there for 2 or 3 generations and runs, a 7-Eleven store on the corner, is always honest and opens, gets up early every day, he's putting his kids to school just like you. He just happens to have, he happens to be Islamic and have a beard. So, don't be that guy. Don't look at fear and all of this. That's how they divided and conquered very successfully with the CV-19 as well. So social media is designed to do that. And Elon Musk is doing a great job of promoting the outrage as part of this in the name of freedom for speech. He's actually manipulating people as well. And the point of this is understand that the sites have been put on the relative wealth of the Western man. And in a great leveling game, the people that need the greatest deflation of their nation state and undermining of their rights for a future surveillance finance system are people living in the West. So you may be at the highest apex and always thought, when you lived in London or the UK, you always thought, or the States, for example, you're better than someone who lives in Indonesia or Latin America or Bali. I'm actually saying to you that they're at the lower end trending up and you're at the top trending down. And actually put up with a couple of things that may be less convenient than maybe some aspects of living in America or the UK. You're actually going to have a better journey up in those other destinations than you are watching the steady decline and the undermining of rights. Plus, don't forget the Deagle stats and all that they have planned. There is an absolute target, not only on the financial wealth and living standards of the white European in Western nations, but also on the population numbers of that particular tribe or ethnicity. And I think you've got to be safe and be amongst other people which are less targeted in some instances. And I continue to say, and will continue to say, and I'm expecting to be a Cassandra on this point, and everyone will look back in 20 years' time and saying, damn, I should have done what that guy said. Because it's very hard to leave your home nation. I've had to do it myself, and it was tough. You can always revisit. You're not leaving. You're just ceasing to be a permanent taxpayer and passport holder and company owner and all those things in one nation state. You're saying, I'm no longer a tax resident. You've got to sack your slave master in the Western nation and find a new one that will offer you better terms for your slavery and your tax contributions, in another nation that has to make it attractive to get other people because you weren't born there like the locals. And you always get better terms as a non-patriarchal, indigenous, Georgian, Latin American, if you're coming from somewhere else, and if you're bringing a reasonable amount of wealth or your own means, at least, at minimum. So go where you're treated best, and it isn't the West at the moment. Being a white European in the West, you're a second-rate citizen in your own country. And it's by intent, and it's going to get worse, and there's going to be less of you when they're done. And you're going to be a whole bunch poorer. So understand that. It's a Bolshevik cycle that went for Russia. And you need to miss that. It really is, that's a dark prophecy. And I'm sorry to be the one delivering it, because people don't like nasty messages. You can have an amazing life, taking community, friends, family members to other places, re-establishing where there is not an attack vector on you, where they're happy to have you. So, for example, in Panama, gringos are very well looked after where you are, because they need the wealth, they need the money, they want the tourism. You know, your word might even be taken above a local indigenous Panamanian in an event of a car accident or a bumper bashing or something, just because, and you recognize that you must be protected. Why not be there? Why not be there? Why not be there where you can have a property purchase that has 40 years, 30 years, my apologies, no tax? Because what are they going to do? They're going to throw me out of my properties in the West. How are they going to do it? They're going to increase the tax until I can't hold it anymore. And they're going to put rental controls that I can't rent it for what I need to rent it to pay all the taxes for. Because there's too many poor people and I'm a rich bastard who's got some assets. And they're going to create, they want all the crabs in the bucket, and the other crabs are going to pull me down to their level because they've all been leveled by the system. Don't be caught in those systems. Go where you're welcomed. And this is part and parcel of a message that it's a hard message to deliver, because you've got to sever ties. But you can always go visit and love your favorite football team and go on holiday in your old home nation. But get some freedom elsewhere. Get optionality. I'm tired of having to debunk everyone should be all in Bitcoin and volatility is a feature and all of this spin and how many chairs are you sitting on? Like, why be diversified? Like Michael Staler, cranky analogies. You're the fastest horse, cranky analogy. Have a stable of horses. We only sit on one chair because physics is a guaranteed fact. Financial performance and beta on the future and who's controlling what is an unknown. That's why we have portfolio theory. So you have gold and you can speculate and have a bit of Bitcoin and you can have some property, but make it property in different nation states that give you optionality. How do you position? This is the big question everyone is asking that is watching. Okay, Francis, I think some of the things, you're a drama queen, but I think some of the things you're saying could happen. How do I position? This is our game. How do you position for reset economics, where people are coming to strip you, coming potentially even to reduce your ethnicity substantially, are undermining you in every aspect, and that's never not been a precursor to a genocide, by the way, where an entire media system is turned against, and that's what happened to the Tsars, Romanovs, and the White Russians. Boy, did they lose people. The biggest single genocide ever committed against Orthodox Christians. That's the history you never get told and have much of a fuss about. You get told other history. This is a real warning. The Orthodox Christians of Russia are the Western white Europeans of today. So don't be there when it happens. And everyone, I will die for my country, as if it's a declaration of heroism and courage. It's a declaration of inertia and stupidity. Your 9mm does not compete with whatever's causing those California fires that's coming out of the sky. Your 9mm, does not compete with whatever. I'll die grimly with them, in your hand. Why not live happily? And why not be a better carer, custodian for your kids that might also like a life, to have a wife, fall in love, do various experiences. So sometimes, Art of War, Sun Tzu says, the greatest warrior is the one that didn't fight. that managed to get his objectives without having to pull his sword out. By the time you pull your sword out, both of you have lost. Even if you're a great swordsman and are likely going to win the fight, you might still get a cut, a nick, an injury. You might be unlucky. You're always better off if you get uninjured, 100% guaranteed, and you still get what you want. So the greatest war is the war of the mind. So go be where your chances of survival, the outlook, and the demographic trends are all up. You look at Japan, the US, the demographics are awful, and they're inverted. And there's this coal coming, in my opinion. Go to Indonesia, Bali, these places, you've got a big, youthful group. You will be relatively rich, slightly older than the bulk of the generation. You'll have services, massages for free. You'll have little phone services where you can get someone who'll come and clean your kitchen for $5 in 5 minutes, and you'll show up on a scooter. You can have a great home. You can be by the sea. You can have people bring you fresh fruit every day and give you back rubs. You know what? What's wrong with that? And it's going to get better and better, and they're going to get wealthy. And you'll always be a liked person who's bringing employment and spending money and raising their living standards. What's wrong with that? And go on holiday to watch the Miami Dolphins once in a while with your old schoolmates if you're an American from Florida, or wherever. Go back to London to see Tottenham Hotspurs get thrashed by Liverpool. Well, whatever is your boat makes your boat float. You're not being severed from wherever you were born, but you should retain more of your income. I also give this piece of advice, Jesse: double a dollar and do it every year for 20 years, and you end up with over $1 million. Amazing, isn't it? So my goal to you is find a dollar and double it 20 years in a row. Double a dollar and pay 30% tax at the end of the year, and then only get to double the net the following year. What do you think you have after 20 years?
That's fantastic advice. And you're preaching to the choir here. Obviously, I left my home country of Canada in October of 2021, and it was a surreal moment because as this was just before our lovely prime minister had declared, or just after, I should say, if you don't take a vaccine, you can't leave the country. And I was like, you can't leave. Like, this is on another level. So I'm booking my ticket to the Balkans. I'm out of here. And when I came across people, and I was like, I'm getting out of here. I'm going to at the time I was going to Croatia. And they're saying, what, you're leaving? And I was simultaneously thinking, what, you're staying?
You're staying?
Like, what are you,
Yeah, exactly.
what are you thinking?
Exactly.
But yes, some excellent words of wisdom there. And I mean, the amount of money you can save on taxes leaving a place like Canada, just as one example. Unfortunately, Americans get tied into their tax system wherever they go. But for Canada,
surrender your passport.
That can happen too.
Passport.
Yeah.
Sever your ties to your slave master in full. If the fact that they make it difficult means it's all the more reason you should be doing it.
Yeah.
That should make you more determined. Surrender your passport. Get a passport. You can get a Mexican passport. You can get a Georgian passport. You can get anything. Surrender your passport. Get out of it. Just because it's hard and inconvenient doesn't mean you shouldn't be losing it. Get rid of it. Absolutely. 100%. By the way, the answer is 24 grand if you pay 30% tax. That's the difference between $1 million and 24 grand. You owe it to yourself not to fund these criminals that are giving that money to Ukraine, Israel, and all the other nefarious projects, organ harvesting out of your dead Ukrainian soldiers, all these other dirty, dirty businesses. They are vile, dirty businesses, and it's a money laundering scam. You've seen it with FTX in Ukraine. You've seen it on all these things. There is so much skullduggery at the top. They're nothing but a haven of thieves. So get out of that system. Get out of those systems and get somewhere else. And you can be a permanent tourist of the world.
Yes.
And save in gold.
Absolutely. Well, Francis, this has been a fantastic conversation. Greatly appreciate it. For those who want to hear more from you, tell us about the Market Sniper and anywhere else people should seek you out online.
Yes, we have two YouTube channels, the Market Sniper and the Crypto Sniper. The first deals with technical analysis on generally gold, debt, a lot of these key drivers that tell us when the big things are going down. As you saw from today, the yield curve is close to reverting. when that comes back, a bigger event is almost certainly waiting for us, and we think it will likely be the reset. You could lose your money in your banks, ATMs could go dark, all these things that people sell you doomsday nihilism for, but actually has a much higher probability of happening. There's real opportunity in that. Be the one that survives, be the leader, be the man who took action, be like Jesse, who left just before people started to mandate. Take action.
Yeah, I'll put links to all of that in the description below. Thank you once again, Francis. It's been a blast as always.
Absolute pleasure. Thanks for having me on, Jesse. Stay well for now.
And thank you for joining us today. As a reminder, this episode is brought to you by ARC Silver Gold Osmium for all your precious metals needs. Head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.